Okay, so this is the new Module 3 using the stochastic indicator for entries and stops. Okay, so we're going to look at the areas on the stochastic indicator where we want to trade from, and we'll also look how we use the stochastic indicator to time our entries with our levels. Important thing to make sure that we are timing them with our levels. So we'll be looking at some entries with the trend and then entries with possible reversals from strong levels. Again, we'll go into the hourly chart on another webinar. We did speak about it today, but we will go into the hourly chart on a separate one. So we'll just concentrate on the actual mechanics of the entries. We won't be looking at the bigger picture today. I just want to get to the mechanics of the actual entries so everyone's clear on those. So massive drop today. This is the 25th of March. And we can see how we can time our entries with our possible levels. Okay, so let's just go back to this morning and see what possible trades there were. Okay, so there is an extra, again, I've just hidden the extra indicator. I'm just going to go through the actual entries, what we're going to be using for the entries. And that is the stochastic minute 1, and that's the one with the green and red. This actual indicator, you can turn an alarm on, so I've got that one separate on the site as well. You've got the option to turn alarms on when we get into the 80 and 20. And then we've got the multi-time frame indicator at the bottom. Exactly the same indicator as the first one, but this is showing the minute 5 on our 1 minute chart. So we can see how the minute 5 stock is actually moving on the 1 minute chart, so we can see all what we need to see on the one chart. And then we've obviously got our grid on as well, and that's where we're going to look to time our entries from. So I want to really clean up our entries and just make them really simple for everyone to understand. We obviously want to be trading from our levels, as we've seen in Module 2 using the grid V3. We know the euro tends to move most of the time from one level to the next. We can see today, early on, we've moved through 2 levels, and we did push up 1 level just over, and then that's when we started our move down. But we can see again our levels have been in play today. Now this was the first trade what we missed, but I will go over again. As I said, I'm not going to go over the hourly as well. We'll add that on later so it doesn't get too confusing. I just want to really simplify everything. When we start putting it all together, we'll look at the hourly time frame and see how we can time our entries with trend and when to hold for longer. But for this module, just literally want to show the actual entries. Okay, so you see the dotted red line here. This was just before 7, and we've got a possible entry here. So literally all I want to be looking for, firstly, going with the trend, we want our minute 5 to be preferably, where possible, to be coming out of the 80. So on both these 1 minute and the 5 minutes, we've got the overbought areas on the 80, and we've got the oversold at the 20. So preferably we want to be buying from below the 20 and selling from over the 80. That gives us our best chance with our stops. Again, later on we'll go into trading with the trend and how we're going to establish a trend and take high probability trades and avoid the losing trades. But we'll just go into the entries for now. So what we want to be looking for as we break one of these levels, we want the 5 minutes, the blue line, to be below the red line. So we want to be crossing down towards the 20. The only thing we don't really want, there is going to be there is going to be times when we can add positions and take trades when we are starting to go into the oversold in this case. But we want to try to time our entries before we've actually reached that, so it at least gives us the momentum to go in our favour enough to manage the trade. So that's what we're aiming for. So as long as we're crossing over, which we did early on, and we're breaking our level, as I say, once we know the thick red lines are in our favour, we want to be looking to time our entries as we break these lines. Now, how I've tidied up the entries and trying to make it simpler for everyone, as long as we're getting that criteria for a break, if we go in with the trend, and as I say, we'll look at that with the hourly later, because I've massively tried to simplify that also. But we did know the trend was to the downside before we had this break. So we're looking for an entry with a trend. Literally, all we're looking for is we're looking for the stochastic not to be in the oversold already, and we're looking for the blue line to be crossing the red, and then we can take that trade. And ideally, where possible, we want to get in as close as we can to the level, rather than waiting for a break and getting that 3-4 pips away from the level. We really want to be getting in right on those levels. Once we know we're going with the trend, we know the probability is with us that we'll get the break, as long as we're not below the 20 and oversold on the 5 minute. Again, for this type of trade with trend, we'll ignore when the 1 minute is in the oversold. So we're not using the 1 minute for this type of entry. When we're looking to trade with the trend and break these lines, we're literally just looking to make sure the 5 minutes going in our favour towards the oversold. In this case, obviously if it was opposite, if we were going long, we'd want to be going towards the overbought. So that's as simple as I can make it for the entries, but we want to be timing our entries right on these grid lines. And the reason for this, we want to get our stop as far away from this line as possible. What I will be doing as well is coming in with a 10 pip stop, a standard fast, to stop the different stops as well, and hopefully help people all get the same results. We will look to tighten up these stops quickly, but initially we'll look to come in with all entries now with just the standard 10 pip stop, but we will look to trail as we do with the grid, and also we'll look to obviously to move the stop as soon as possible. But initially we want to get in as close as we can to the grid line, and we want to just come in with this 10 pip stop. And once the trade starts to move in our favour, again, when we first hit the line, this is where we can tighten up the stop. What I don't want to be doing is depending on our entries, obviously sometimes we may get in just below the grid line. What I don't want to be doing is moving our entry to break even too soon, especially if the entry is a little farther away from the red line. For the sake of a few pips, I'd still like to get it above the dotted line. So if we're going short here, once we've initially fast hit the midline, or the next unit of 10, in this case it's 0.20, we're going to tighten up our stop from 10. In this instance, if we got in dead on the 0.30, which we'd be looking to do, if we manage to get that entry spot on, what we'd be we want our stop here. And remember, we add the 1 we add 1 pip onto the dotted white line, just to get us avoiding hitting that dotted line. So in this case, we'd want our stop at 0.32, but what we do, we move our stop to 0.33. So I hope that makes sense what I'm trying to say there. So we want our stop to be dead on the 0.32 line, but what we'd actually type into the box, and we will go through this daily, is we type in 0.33. So we tighten up our stop at this point from 10 pips to just 3 pips, and we know we're getting our stop above this grid line, and when the grid lines are in play, we should hopefully get some sort of protection from that grid line. So we've reduced our risk right to 3 pips, and then we're looking to hold. And here's where we can look to add positions. I'll just briefly go over this. We are going to do we're going to go into a full module on this. But when we're breaking these midlines, as long as everything's going on our favour, especially once we've come out on the 1 minute of the overbought and we've started to turn back down, that's the sort of area where we can look to add a position. This is how we can use the 1 minute for adding. I'm just briefly going to go over this because, as I say, we will do a module on adding positions because it's going to be very important. I want to make sure we're getting more positions added because that's when we can hit our targets a lot quicker. But just using the 1 minute, we can time our entries around the midline also. Because we know chances are once we break this line, especially when we're going with the trend, we're going to go at least to the next thicker red line. So we can, once we get the criteria, look to add positions also. And that is actually where we got in our entry today on the break of the 0.20 line, which is second position. But once we're going with the trend, that's what we're looking to do. We want to get our entries, as I say, as close as I can to these lines. What we want to do is get our stops just above each grid line, the thicker grid line, and then as we trail it down, we can obviously move the stops together. Again, we'll go into that more on another module. So just to go over the entry again with the trend, literally all we're looking for now, we're using our grid lines as long as our grid lines are in play, which we'll check every morning to make sure they're still looking like they're being used or still in play. And then once we break, we're just looking for the cross on our 5 minute stop. So we're not using the 1 minute stop at all, not for this type of entry, not with the with trend, and we're trying to get in as close as we can to this red line. So just remember, this is just the with trend entry. So that's the fast type of entry we're doing. Very, very simple. We're just looking to take the break, and we're looking that we're heading towards the 20 on the 5 minutes. So blue line below the red line. Again, there's something else that we'll check with the trend, but I'm gonna do that on the next webinar on the hourly one. I just want to make sure everyone's straight on that. So that's literally all that we're looking for. We're heading towards the 20 and we're breaking one of our grid lines for that with trend entry. And now we can look at possible reversals. Obviously today wouldn't be very strong for a reversal, but the 90 level was the first initial target that we were looking for. So let's just take this as an example. Again, there's a little bit of divergence which we talked about in today's webinar, in today's live room, shall I say, sorry. And we will do another module on divergence, also going into that in more detail. But this was one of our levels, the 0.90. Again, it wouldn't be a great reversal if we're looking at the hourly, but I'm just going to use this as an example. So what we're looking for the reversal trade, we're looking for one of our stronger levels, one that we've got marked up on the hourly especially, and also the hourly indicator in our favour as well, but we'll go into that on the hourly webinar when we put it all together. But once we've got those two bits of criteria together for the actual entry for the hourly, what we're looking to do, we're looking to be in the over sold on the 5 minute, and we're looking, ideally, I do like to go through the levels rather than this one we're just missing levels. We do sometimes miss entries, but I do prefer to go through a level like this, or especially the second time we went through. And then what we're going to look to do, we're going to look for the 5 minute to be in the over, in this case the oversold, because we're looking to buy, obviously vice versa if it's the other way around. We're looking for the 5 minute to be in the oversold. Now the 5 minute doesn't necessarily have to cross up, especially if we're on a stronger level, if we're on one of the key levels on the hourly. But once we're in the over, we're showing oversold in the 5 minute, and all we're going to look for is we're going to look for the 1 minute to start crossing up through. And again, we want to time it as close as we can. This one would be actually entering just off of the 92 with a 10 pip stop for that reversal. But if waiting, this is a better entry here. As we can see, we've got a little bit of divergence on the 1 minute. We've started to show some on the 5 minutes as well. And as we start crossing up here, we can get an entry right on the round number. And that, again, that's what we want to be doing for the reversals. So the criteria that we're looking for the reversals, we're looking for the 5 minute to be at least below the 20, and ideally if it's been below the 20 from the next level and then we've come to one of our stronger levels, there's a higher chance, then high probability that we're going to move in our favour also. Even if the trend carries on as it did today, there's a good chance that we're going to get a little bit of a pullback, a little bit of a breather as the price coming down, and we can then use that to manage our trade. As I say, this wouldn't have been a reversal today, as we'll look into when we see the hourly, because it wasn't giving us the criteria. But for the actual mechanics of the entry, we're looking for the 5 minute to be below the 20. Doesn't necessarily have to be crossing up on the reversal, because if we're taking a more aggressive entry, especially from a stronger level, we're just looking for that to be below the 20, and then we're looking for the 1 minute to cross up. And as I say, this is a nice entry that we can see here. We're crossing up just as we're hitting that line, so we can take the trade there with a 10 pip stop. As we move up in our favour, we would have moved the stop up to this level. As I say, in this case it would have been stopped out for 2 or 3 pips, but we're not going with the overall trend with this one. But for the actual mechanics, that's exactly what we'd be looking to do, and that would be a nice entry if this was a stronger support level. We'd be looking, as we cross up through, as long as the 5 minute was in the oversold, we'd be again looking to take the trade as close as we can to this level. So we're not, for the guys that have seen the previous modules, we're not looking to wait till we've crossed over by X amount of pips. We're just literally, as soon as we get that, we're taking the more aggressive entries with the 10 pip stop, and then we're going to look to manage the trade as soon as we can. So in this case, as I say, we would have come back and closed out for a couple of pips lost there. But once we catch these moves, we tend to, once we go to the mid, move to the next line. And as I say, if we were coinciding with a longer time frame here, we could well have moved away, and we tighten up our stop very quickly, reducing our risk as soon as we can on the trade. So here's a better example of a reversal. So we'll go over this one. Here, this is with trend reversal, so we're getting all the criteria, and this is what I mentioned in the room earlier. So we've come up with, as I say, we were going against the longer term trend here, so we could just leave this and be sidelines, and once we start to hit these levels, we'll be looking for the same thing. So even taking this fast initial entry, not quite in the overbought there on the 1 minute, and there's obviously no sign of divergence, but nevertheless, even taking that particular trade, once we start crossing, we can look to short as close as we can to the line. So even in this scenario, we may just have got away with that time, but we're giving that trade a little bit more breathing room. But again, a much better entry here. When we've come back up above the line, again, we're still in the overbought, and we're starting to cross. We failed to hit the midline on above the 0.10, and as we start to cross back over, you can almost wait, and we're getting the 5 minute crossing over. But this is when we can take a more aggressive stance, especially when we're going with the trend. Today was a good example, because we could obviously see on the longer time frame that we're moving down. Now this will be a more aggressive entry, but this is ideally where we want to be trying to place our entries. As we're crossing over here, we can try to take an entry around this point, just above our line, if it's all looking set, especially looking at the 5 minutes. As I say, I will be talking through this exactly as we're doing it through the day, so it will be a lot easier to follow now during the live rooms. But as we're starting to come out of the 80, especially, we're crossing over, we're coming out, it's looking like we're moving in our favour, we're going with the longer term trend, and we can get our entry just above the line. Look, what that does is it protects us, it puts our stop then closer to where we'd have the trailing stop. So getting in around this area, we can then get the stop above the mid level, which again gives our trade a little bit more breathing room. And so managing this one, we can see this one working better because it's going in the favour. As we come down to the midline, we'd be looking to move our stop initially just above this line. So if we had got our aggressive entry here, this may be a case where we can move it to the break-even point rather than just tightening the stop. So that's another advantage of getting a more aggressive entry just above a level. So we'd get our stop just to this point here. We'd be using 0.13, just adding with spread, adding that 1 pip of spread on that level also, and that's just making sure our stop's out of the way. Now we've gone to the overbought again here. You can see on the 5 minute, and we've crossed back up, but you can see the levels being protected there, especially when we're with trend, and this does happen a lot. We did get stopped out last week on the trade, and that's because I tightened the stop up a little too quickly really. We had this pullback very similar actually to this move. We got our entry just below the line, and rather than just tightening our stop to 3 or 4 pips, we've moved it to break even. This is when we can sometimes be caught out. When the levels are in play, they do work well. So as long as we're getting our stop above this level, we can give the trade a little bit of breathing room and then let it move along again in our favour. Again, just very quickly, we would, just to go over the add-in positions, wouldn't be looking to add here because we're looking overbought on the 5 minute. But you can see also when we've had that slight pullback and we start to turn back down, again this is a point where we can add a position with a high probability because we're crossing back down towards the 20 in this case, and that's when we'd be looking to add as well. So just going over that a little, but as I say, we'll go over that more in the full module, but that's another thing just to bear in mind with that type of move. So the main thing to remember, we wanted to get our entries much closer to the levels. Sometimes we were way too far away from the levels, and it just affects us. The most important thing about our entries and keeping the stops small is where our stop's positioned. So we always want to be thinking, we ideally want to get them above the previous line. So in this case, when we're going short, we want our stop to be as close to this line or above if possible. And the same with the reversals. As we're coming, we want to be getting the reversal just as we're coming back up through the level, so giving us that extra bit of breathing room. Sometimes we will come down and take a slightly lower low, but again we can then see signs of divergence possibly, and it just keeps us away from getting stopped out when the trade is actually going in the right direction. So that's what we don't want. So the most important thing to remember is where we're going to get the stop. We want to just be getting the stop behind the levels wherever possible. So very simple. We're going to add more of a filter with the 1 hour, but just to remember the actual entry criteria using the 5 and the 1 minute. For the breaks of the levels going in the desired direction, so with the trend, we're simply looking for the 5 minute to start crossing and getting below, so the blue line to be below the red on the 5 minute. We don't have to worry about the 1 minute when we're going with the trend, because quite often it will be, in this case, oversold. Quite often we'll see that on our entry. So for a with trend trade, we're ignoring the 1 minute and just making sure the 5 minute is crossing towards the 20 if we're looking to sell, or towards the 80 if we're looking to buy. So that's literally all we're looking for, and to get in as close as we can to the level. For the reversals, we're then looking for both. We're looking for the 5 minute just to be in the oversold for a long position or to buy, or to be in the overbought for a sell. But then we will use the 1 minute. So we're just looking to get in as close as we can to the thick red line. As I say, in this case, not quite hit. We've got one possible entry here, so we're crossing up, and we just want to be getting in, just as we see in that crossover, we want to be getting in as close as we can to the red line. Again, another possible entry here a little later. Just as we're crossing over, again, starting to get these entries as close as we possibly can to the line, which is giving us a little bit more breathing room for the trade to mature. So that for the actual entries, and using that 1 minute and the 5 minute, that's as simple as it's going to be. We will look at when to hold, when it's a good idea to hold, and that will be using the hourly chart, but we're going to do that in the next module. I just wanted to go over the entries and try to make it very, very clear and very, very simple. So we're not going to look for the 1 minute bar to be passed or anything more complicated than that. We're literally going to be looking for these indicators to be in our favour. So on a break of a level, the blue below the red, and we take the trade as close as we can, and for a reversal to be overbought or oversold, and then we're just looking for the first crossover of the 1 minute. And as I say, ideally we like to see, I like to see the levels be hit and we start crossing back through. That's when we're getting the better entries. And when we're going to tie this into the hourly, what we're looking for, as we did last year, we're initially just looking for areas which is likely to bounce at least 10 pips, so we know we're getting a good bounce for reversals of at least 10 pips, so we can at least limit the risk to just 2 or 3 pips on each trade. With trend, we're looking for momentum of obviously the break of one of our levels, so we're just looking for the 5 minute, and we just want the 5 minute to be turning towards. We don't want to be entering too much when they're bought or oversold, so when they're already below. Although in a strong trend it will carry on, as we've seen down here, down later on in the day. We obviously stayed oversold for some time, but we can look at the hourly chart to help us with that. But just for the initial entry, what we want to be doing is heading towards the actual 20 or the 80. So giving us a good opportunity to at least break down towards the next level. Because we know when we're going with the trend, like I say, the likelihood of us getting to the next red line is good as long as we've got all those things in our favour. So hopefully that keeps it as simple as I can, just for the basics of the entry. And we'll start building it together with the hourly. The hourly is going to be simple as well. It will just give us an extra indication when there's a higher probability trade. And there's also a way we can tie that in with our levels, with our stronger levels of support resistance. But as I say, we will start going into that in a later module. So that's literally it for module 3. We're just looking to use these two very, very simply with our levels.